Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly update on Bitcoin. I'm going to try and keep this one short and sweet as we've just gone sideways for a week and bugger all's happened really. So we're just going to update the counts and go through them one at a time, try and be as speedy as we can. If you want to know what's going on the longer term scale and what's happened with the count recently, you should probably go back and watch last week's video because that is where I reassigned primary and alternate counts and gave up on some previous ideas, or well, was forced to give up on the previous idea due to invalidation. So without further ado, let's begin. You'll have to bear with me if my voice is a bit messed up today. I had the live stream for the Patreons yesterday and went on for 5.5 hours and my voice is a little raw at the moment, so I'll do the best I can with it. Now, this is the primary count. You'll notice how all of the subwave count is missing at sub-micro, minuscule, sub-minuet, so on and so forth. And that's because I've just made it not visible on day, weekly and monthly time frames to try and keep the chart a little less cluttered. I haven't done this with the alternate counts yet, but over time I intend to do this with all of my counts, as some people have mentioned how you can't see the chart, Tom, for all the numbers and letters, which is fair enough. But if we come down to the 2 hour or the 4 hour, you can see how all of that subwave count is still there, right? But it's just not visible at higher time frames. Okay, so it makes it a little easier to see what's going on. Now we are in day time frame in log scale looking at the primary count. Now let's just start with the absolute basics here. Invalidation point for the primary count is here at 13. I tell you what, we don't need that anymore. And we've got the 20k previous all-time high at 19666. Now invalidation is at 13,880. Right? That means the wave 4 in this primary count has come beyond the wave 1. At that point we would dump this count as incorrect and we'd adopt the alternate if the alternate itself was still valid. Alright. Things can happen between now and $13,880, can't they? In terms of how the structure develops. But that is the hard rule. We cannot come back beyond that point. So now that I've made that change, let's just save the chart. Bring up my little favourites bar. Now you'll have to forgive the fan in the computer spoiling up and down. I'm doing some post-processing on the video with some video software at the moment and it is quite CPU intensive, so I've got the main fans turned down to try and keep the noise here in the office down, but it's just getting to that time of year where everything's getting hot, including myself, so yeah, we're coming into the British summer. Might last a few days, this one. We'll have to wait and see. But either way, here's 4 waves. We're in the 4th wave and the 5th wave to come. Right, so 1, 2, 3, currently in the 4th. And subdividing the 4th as a flat. Okay, 3 in the A, 3 in the B, 5 in the C as a contracting ending diagonal, and therefore the subwave count of each of the 5 waves will subdivide as a 3-wave zigzag. Let's just go over the rules for the diagonal and let's come down to the 4 hour time frame for a minute to give you an idea of how I'm looking at this thing currently. Okay, so I had the wave 3 here and I'm still not convinced that it's not here. It's just a case of the price action doesn't support the idea that it is. I'll have to explain that in a minute. But essentially all we're looking for is the rules of the diagonal are obeyed, but it maintains the right look. And the right look is more important in the sense of you could obey the rules and it could look like a mess. And therefore we would definitely discount it if it looked completely wrong. Now we're going to come into linear scale just to press the point here. So let's take the first rule that the wave 3 cannot be longer than the wave 1. It's like, still can't be the shortest because it's still a motive structure, so it can't be shorter than 5. Okay, but it can't be longer than 1 in the case of a contracting pattern. Now usually in an impulse the wave 3 is very, very often longer than the 1, but we're not in an impulse, we're in an ending diagonal. So let's take the length of the 1 and project from the 3. Well, we can see that we come past the invalidation point at 12.82 if we were to go to 1 to 1. So irrelevant anyway if that were to happen, as the whole idea is invalid by that point. So no worries there. The next worry we have, if it is a worry at all, is that the depth of the 4 cannot be greater than the depth of the 2. So, as you can see, currently, if this was the 3 here, then the 4 can't go beyond this white line here at 4924.93. So, let's say we just pushed it to the limit, we would still look like a wedge. However, if the 3 comes down lower and lower, then the target for the 4 moves down, and if the thing looks even more like a wedge, so it actually improves having the right look at that point. So it's not a problem. It's just a case of we don't want to go so deep that we start to get close to running out of room where we'll invalidate the whole count. But that's it really. Now, we're not going to know for certain what's going on until that wave 4 comes in, and if it obeys that rule of not going beyond the depth of the wave 2. Unfortunately, Bitcoin is notoriously nasty around the lows to read. You know, if you want evidence, I spoke about it yesterday in the live stream. Go back to the 2020 lows in March. Right? Now, I've slapped a diagonal in here to explain what's going on to the 1 and the 2, and then from that point marching higher. But believe you me, when I came in to this count, this huge wick with lower closing candles below it. Is this the low as a truncation in candle, or should we just use the line graph and say that this is the lower low? Is this an impulse here? Well, what's this and why is it overlapping? And yada 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 yada. Alright, it's a nightmare. An absolute mess, and only in hindsight do we know that it went from 4,000 to 70,000. We carried on counting on the way up as best as we could, but believe me, I had people screaming at me the whole time that this was corrective. Oh Tom, there's no way. There's no way that's motive. This is going to come up and we're going to 0. Or we're going somewhere near it. And I insisted that I felt the price action was motive, and it turned out to be the case. Now, probably better luck than judgment in those early days because it looked like rubbish. So let's not jump the gun. This could be some kind of motive structure, but I can't see it. So I'm siding with it being corrective. Okay. Now, if it's corrective, that means we're getting a very, very, very long C. Now, fine, that's all right. You know, extended Cs are very normal in crypto. Let's just ignore the wick here for a minute. Look at the line graph, and what do we see? We see 1618 perfectly. So that could be the C right there. And we have got some kind of maybe a diagonal forming in an A. I don't know, or a diagonal in a 1. Or it would be an A here for ABC into the 4, sorry, excuse me. But you take my point, right? And the 2618 is all the way down here, which would be the next target extension. I don't think we'd have to go that deep, and the C's getting extremely long by that point. Now, let's bring the candles back and try and explain what's going on here. So, that's the primary, and we're just waiting for that 4 to complete. Now, I've got explanations for what's going on here in the 4, but I can kill 2 birds with 1 stone if I now move on to the alternate, which I think I'll do. Because there's going to be the same correction, essentially. So let's bring up the alternate idea. The alternate idea is that the flat back here, ABC, was the whole 3 into the 4. This was 5 waves into a 5, into a 1, and now we're doing an ABC, and we're collapsing down in a giant zigzag, which could bring price down as low as 10 grand, and anywhere between that and 20. You know, it's just one of those things where there's no way of knowing until we get a larger wave 3 complete in order to project it, right? But it could be nasty as hell if this alternate is correct, and it's not the primary count. Now let's but nasty only short term, because if you complete a primary 2, you're going into a primary 3 of a cycle 3, and you're going astronomic after that. So I wouldn't worry too much. So let's look at these 2 ideas here. Try and remind myself which one well, that one turned out to be wrong, so I think this one is the one I like. So let's come down to the hour time frame now and have a look at this thing. So, explaining the move off of the low. Like I said, I can get 5 ways, but I have to abuse it quite a lot. I have to say that's an impulse. You can say, oh, maybe it's a diagonal. There's no overlap, and there has to be in a diagonal. Okay, so we could either try and bully a 5 into there, or we could just accept the fact that it looks like a soldering zigzag. Alright, So if it's a zigzag, then this is how I've interpreted it. We go into a W, and then we get a flat pattern, zigzag A, triangle B, C. Okay, into an X wave, and then we come 1, 2, 3, 4, 5 into an A. We'll get some kind of B, and then we'll push up higher, 5 more waves into a Y to complete the 4. Should come in somewhere within the prior wave 4 of a larger degree, which is back here. Of a lesser degree, excuse me. So maybe we shouldn't go beyond that red line. We can, there's no rule saying we can't. I mean, the only rule what we can't break here is we can't come all the way back beyond the 1, which is all the way back here. But believe me, if we came up to 37 grand in any short order, I think we'd be getting far more concerned with the idea that this must be some kind of low, as opposed to it being a corrective 4 at minuet degree. That would seem ridiculous at that point, wouldn't it? So that's a worry we'd all like to have, I think. I would not object to it. And then finally, a 5th wave down into a 3, right? Then we're going to get a 4 over the next few weeks into the summer, maybe a bit longer, which brings us into the prior wave 4 of a lesser degree. So we get overlap 3, 4, 3, 4, 3, 4, which is what you always get once you've extended like this. And then you come down into the 5th of the C of the 2, somewhere between 10 grand and 20 grand. Okay, depending on how big this wave gets. There's just no way of knowing that. Okay, and that's the alternate. So there you go. Invalidation all the way back at $3,122.28. So you got bigger worries if you come back that far, haven't you? That's the alternate. That's the primary done. I've explained how I think we're probably correcting here in the shorter term. I do have alternate counts, such as a combination count. But because I labelled the 2 back here as a combination, I'm going to stick with what I've got here until proven wrong. Now finally, let's just bring in the same flat pattern idea, but without a diagonal. Now this is still one of those counts that's just a bit ugly. It comes to a 123.6 extension of the A, which is a flat target. It channels absolutely perfectly with the 1 and the 2. 1 and the 2 and the 3 and the 4 to here. Channels perfectly, comes to target, has really nice synergy, has really nice time length relative to the 2, nice depth, everything looks cushy. Okay, except the structure at the low here, and the structure in the 5 wave move down here of the A. That looks horrid as well. Or, sorry, 5 waves in the 3 of the 5 wave move down in the C. Excuse me, I should say. Let me explain what I mean. Because I did cover this in last week's video, so like I said, you should probably go back and watch that. This impulse is not pretty. At all. Right. And that's why I favour the idea of it being free into a zigzag, into a diagonal, over a force fit 5 waves, which is what we've got here. But the channels nicely and it comes to target, so we really are still just, you know, in a waiting game at the moment, waiting for things to clarify one way or the other. Another breakdown and a bounce would help an awful lot. A big rally up and invalidating other ideas would help a lot, but we're just in one of those moments at the currently that we just can't be sure what we're dealing with. That's still the primary, going to come down in a diagonal. Alternate is that we top them, we're going significantly lower. When we've got that flat idea, which is that we're done. So now that we've spoken about the Elliott wave counts, let's now do some classical analysis and see what we can see outside of our Elliott, taking our Elliott wave hats off for a moment. So let's come out to the daytime frame and let's switch off our Elliott wave counts. Let's bring up our moving averages. Bring up our volume, our VPVR, and let's bring up our indicators as well. Right, so we've got a whole bunch of stuff to play around with here. We'll shut down the correlation coefficient for the moment and the on-balance volume. Okay. Alright then, so as I previously pointed out, big time channel. That's working out nicely at the moment, point to point, point to point, with a nice strong bounce. Let's come to the weekly time frame to emphasize this point actually. As I've also pointed out previously, we've got these interactions with the 250 weekly exponential moving average. Green box, green box, green box. Now previously in the larger cycle wave correction, we've gone through it as we have here at primary degree, intermediate degree. This is primary, this is intermediate, excuse me. With a huge wick to the downside but bodying the candles above it. We bodied below them here on the larger degree. If we come in and have a look at the candle here, we can see that we've got a long wick to the downside stopping before the 250 near the edge of the channel. That's quite a bullish candle, there's no doubt. It's not the most bullish candle, and so far this week is looking very, unfortunately, weak. If we had, for example, come up and gobbled up the body of the hammer, of the body of this hammer here, and finished above it, that would have been a bullish engulfing candle, and that would have been a very strong sign that we had a motive wave off of the low on a smaller time frame. But we've seen evidence that it isn't there, so it was a lot more likely a temporary bounce. Okay, on the weekly time frame, the 10 and the 20 have crossed through the 60 exponential moving average. The 20 crossing through the 60 on the weekly is often a sign of an impending low. Not necessarily a bottom, but an impending low. Similar to how the 60 crossing through the 250 on the daytime frame is often synonymous with a impending low. And we saw that back here, where we had a dead cross 60 over to 250, and it resulted in the low here, which then resulted in this bounce. Okay, and now the larger time frame in the weekly, we've had a weekly def cross occur, right, and it's formed this low on volume here. Now, like I said, doesn't have to be a bottom. Doesn't really look like one at the moment. Okay, not gonna dismount, not gonna ever discard it and say never, can't be. I'm just saying it doesn't look like one. Okay, but there's that crossover 20 over to 60, and we've had this bounce here on the weekly time frame. Often these def crosses of these larger moving averages often do signal lows coming in. Right. Now on the RSI, we've gone from overbought back in January 21 finally into oversold conditions on the weekly time frame. We have not been at oversold conditions on the weekly time frame since the March 20 lows. Okay, so we've done a round trip. Now we did the same back in the December 18 lows to the March 20 lows, right? From high to low. Low to high, high to low. Low to high, high to low. So we are fundamentally just bearish at the moment, but we are getting extremely oversold. Doesn't mean we can't come lower. However, if we were to come lower, I would start looking for some kind of divergence, right, to occur. Now let's come down to the daytime frame. Quite strong volume here on this bottom candle. Like I said, you have to excuse my voice. What do we have here? 16.58k on the day, closing at, what was that, 29,042. Right, so some of the more significant volume we've seen during this whole correction been very, very low. Alright, extremely oversold conditions on the daytime frame, pushing back up into neutral at the moment, but well, actually still in negative, just passing from negative into neutral here at the moment. We did have a crossover of the average through the signal on the MACD, but it hasn't really presented, as the candlesticks show on the weekly, any strong move. But it is still Friday, and we've got till Sunday evening, so if you had an absolute rip up here, you could get that bullish candle on the weekly, but we'd have to get moving pretty much now if we're going to do that. Alright, so overall, yes, we're oversold, yes, we're beating up, yes, we've got some bullish move, signals near the low, but I'm not quite sure it's enough. My own primary supports lower pricing, okay, and my alternate supports significantly lower pricing. So now let's just close these down for a minute and see. Well, let's see if we can find any divergence at all. Now, in the most recent dominant lows, here and here, we can see quite clearly on the RSI. And if we come into here and to here, you could argue that there is some divergence. Okay, we do from here, isn't it? January 22. Yeah. So we've got some divergence here between these lows. Low and lower low, low and slightly higher low. Right. I'd rather have seen, and we may still see, if this is 300 to 405, divergence within this final move down. That would be a sign of a bottom coming in. That's not present currently though. It's not in the MACD either. And if we do bring up our on balance volume for the moment, we can see how here actually it's not supported at all. We have a low and a lower low, so on balance volume supporting lower lows here as opposed to providing bullish divergence. So no really strong sign that this was the bottom. Not yet. But we didn't really have much going for us on some previous lows with Bitcoin either, so it's just one of those things. My gut tells me that it just wants to go a little bit lower. Now if it explodes higher, then maybe this was the bottom, but I'm not convinced at the moment, and that's just unfortunately the way it is. I wasn't particularly convinced back in the March 2020 lows. I was convinced enough to accumulate, but not convinced enough to take a trade off the back of it, but I would happily own more for the long term. I know a lot of people who were sad and were crying when they went up to 70 grand that they'd missed a chance to buy at 30. We're now back below 30 and they're not buying, so for some people there's never a right time. Okay, now we did have one other indicator here which I just realised I left over from yesterday. We were talking about correlation yesterday in the live stream, and we were talking about different assets we're correlated with, and we've got the Nasdaq NDQ here. We can see how the idea that they are perfectly correlated is incorrect. They are not perfectly correlated. They are closely correlated, and the correlation is positive most of the time, but there are periods where it is actually negative. Okay, as you can see here with the downward moves below the central line. But recently, with the sell-offs in the markets, in the broader markets, we've had actually in some areas perfect correlation 1-to-1. And we're very close to that now, currently in 1-to-1. So while we're extremely correlated like this, you know, over a shorter period of time, it's pretty obvious, and most people would point it out, that if the markets bounce, the broader markets, equity markets bounce, then there's a strong chance Bitcoin will as well, or vice versa. So, however, it is a misnomer to think that asset A go up, so asset B go up, asset B go down, so asset A go down. It's not always true. There are times where the correlation breaks down and actually becomes negative. Okay, so just keep that in mind. Right then. So, I think that's all I've really got for you guys this week. So far as the primary alternate counts go, we just need more data. Things will get clearer over time, and we'll wait and see. I'll catch up with you guys again next week, and I've no doubt that I will be discussing this on next week's live stream, and hopefully by then we'll have some more interesting price data, something to really get our teeth into. But anyway, thank you for joining me on this technical analysis of Bitcoin. I hope you've enjoyed it. If you're new to the channel and you have liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment excuse me, in the comment section below. And as always, a huge thank you to my Patreons. Your support is massively appreciated, and if you're interested in joining the Patreon and gaining a whole raft of benefits, then follow the link in the description box below, have a read of the tiers over on the Patreon site, and feel free to sign up. I would advise maybe waiting till the start of next month now so you get a full month's value, but just keep it in the back of your mind. And if you're not following on Twitter yet, please do so. There's a link to my Twitter feed in the description box below as well. Take care of yourselves, guys. Have a wonderful weekend, and I'll be back with you next week. All the best. Bye bye.